JP Morgan has just announced a $1.5 trillion investment plan. That's a massive move, and here are four stocks you should be buying now to follow that money flow. The first company on our list is one that literally builds the foundation of America's growth: Caterpillar. You can't talk about reindustrialization, infrastructure, or national resilience without mentioning the machines that make it all possible. Bulldozers, excavators, trucks, engines, Caterpillar makes them all. And when JP Morgan talks about pouring $1.5 trillion into strategic U.S. industries, this is one of the clearest beneficiaries. Here's why. They're betting on America rebuilding itself. Not just financial growth, but physical growth. Factories, highways, data centers, energy projects. And who's at the center of all that construction? Caterpillar. You can't pour a foundation, break new ground, or lay a single mile of road without its machines doing the heavy lifting. JP Morgan's thesis is about long-term industrial transformation. They're moving money into sectors that can convert capital into productivity. Sectors that create value, even in a world of higher interest rates and deglobalization. Caterpillar perfectly fits that framework. It sits at the heart of the physical economy, an area that large financial institutions now see as underinvested for decades. There's also a financial logic behind this choice. As an asset manager, JP Morgan isn't just chasing growth, it's chasing stability. Caterpillar offers both. It generates consistent free cash flow, has a global moat, and pays reliable dividends, all while maintaining exposure to massive infrastructure spending. Finally, consider timing. Caterpillar is positioned to capture not just U.S. construction growth, but global reindustrialization trends as supply chains diversify away from China. JP Morgan's investment in such companies isn't about the next quarter. It's about owning the backbone of a decade-long economic cycle. So when analysts talk about JP Morgan's $1.5 trillion America First investment plan, Caterpillar is the first name that checks every box: industrial dominance, financial resilience, and direct exposure to the nation's rebuilding story. It's not speculation, it's strategy. The second stock that fits neatly into JP Morgan's $1.5 trillion investment roadmap isn't just powering the digital economy, it's redefining it. NVIDIA represents the technological core of every major industrial revolution happening right now. And if JP Morgan's investment thesis is about funding the future of American capability, NVIDIA is the chip beating at the center of that vision. JP Morgan's announcement wasn't just about rebuilding factories or fixing roads. It was about reshaping the foundation of the U.S. economy. A big chunk of that $1.5 trillion is going towards strategic technologies, semiconductors, and advanced manufacturing. NVIDIA's graphics processing units, GPUs, aren't just powering video games anymore. They're the engines running data centers, military simulations, AI models, and the neural networks that will define everything from self-driving cars to medical research. For JP Morgan, this isn't a speculative tech play. It's a long-term infrastructure investment. Chips have become the new oil. Every industry, from energy to defense, depends on computing power, and with the U.S. government pushing to bring chip production back home, institutional investors are looking for companies that can anchor this new ecosystem. NVIDIA's dominance in design, coupled with its partnerships in domestic chip fabrication, makes it the safest high-growth tech bet available. And what makes NVIDIA particularly appealing to JP Morgan-level capital is its scalability. It's not limited to one industry. Its chips power AI servers for Microsoft, autonomous vehicle systems for Tesla, and defense simulations for the Pentagon. That means multiple revenue streams across sectors that JP Morgan itself is also backing. In other words, NVIDIA is the connective tissue linking technology with the real economy. Financially, NVIDIA continues to deliver historic performance, record revenues, expanding margins, and a balance sheet strong enough to fund innovation at scale. For institutions deploying trillions, that kind of consistent compounding is gold. It's a company with both explosive upside and deep strategic relevance. So while retail investors chase short-term AI hype, JP Morgan is taking the opposite view. They're embedding AI into their long-term portfolio. NVIDIA isn't just another growth stock. It's the infrastructure of intelligence itself. And when you're betting on the next era of productivity, that's exactly where you want your money to be. Up next is one company that represents the very backbone of America's industrial strength, Nucor Corporation. At its core, JPMorgan's massive investment plan isn't just about chasing growth. It's about building resilience. The bank is shifting money into what it calls strategic industries, the kind of sectors that make a nation self-sufficient: energy, defense, infrastructure, and materials. Steel connects all of them. You can't construct a bridge, a skyscraper, a solar field, or a battleship without it. And that's why Nucor emerges as a top-tier candidate. Nucor stands out because it's not a legacy dinosaur. It's a modern manufacturing powerhouse. Unlike traditional steelmakers weighed down by inefficiency, Nucor revolutionized the industry through its electric arc furnace technology, recycling scrap into high-grade steel faster and cheaper than competitors. That makes it both cost-efficient and sustainable, two traits large institutional investors like JPMorgan now demand. After decades of outsourcing, the U.S. is finally reindustrializing, and Nucor sits at the center of that supply chain. Every new manufacturing hub or data center that gets built will need tons of steel, and that's recurring revenue that will span years, not quarters. Financially, Nucor checks every box for institutional money. It has a fortress balance sheet, minimal debt, strong free cash flow, and a history of returning capital through dividends and buybacks. It's also one of the few industrials with the flexibility to scale up quickly as demand surges, an ability that JPMorgan values when deploying such enormous sums of capital. For a trillion-dollar fund, liquidity and scalability matter just as much as growth. In short, Nucor embodies the philosophy behind JPMorgan's $1.5 trillion bet. Invest in companies that build things, not just trade them. Steel may not trend on social media, but it quietly shapes every structure, vehicle, and defense system in the economy. For JPMorgan, Nucor represents the kind of steady, asset-backed growth that can anchor a long-term national investment strategy. The fourth company in JPMorgan's $1.5 trillion investment strategy represents the intersection of technology, defense, and national security: Lockheed Martin. When a major financial institution like JPMorgan maps out long-term capital flows, it doesn't just look for profit potential. It looks for stability backed by national necessity. And few companies embody that better than Lockheed Martin. In a world increasingly shaped by geopolitical competition, from trade wars to technology races, defense spending becomes one of the most predictable, government-backed investments available. Every administration, regardless of politics, continues to expand the defense budget. And as global tensions rise, that trend isn't slowing down anytime soon. Lockheed Martin sits at the very top of this ecosystem. It's the primary contractor behind the F-35 fighter jet, advanced missile defense systems, and next-generation satellites. JPMorgan knows this isn't cyclical demand, it's structural. Defense projects are funded through multi-year contracts that stretch across political cycles, and those contracts generate consistent, recession-resistant cash flow. Institutional investors like JPMorgan also understand that defense innovation isn't isolated from the broader economy anymore. The same technologies driving private sector advances, AI, semiconductors, and autonomous systems, are now being embedded into military applications. Lockheed has already begun integrating AI and machine learning into flight systems, predictive maintenance, and battlefield communications. That means the company benefits from both public and private investment trends, a rare double advantage. Financially, Lockheed Martin fits JPMorgan's preference for dependable, cash-generating enterprises. The company has one of the strongest balance sheets in the sector, a long record of dividend growth, and a backlog exceeding $150 billion. To institutional capital, that backlog is more than a statistic. It's a promise of future earnings locked in by government contracts. So, when JPMorgan commits to strengthening strategic American industries, defense is a cornerstone, and Lockheed Martin is the pillar holding it up. It offers predictable returns, geopolitical relevance, and exposure to the technologies shaping the next generation of warfare and aerospace. For JP Morgan's long horizon portfolio, Lockheed isn't just an investment in defense. It's an investment in dominance. Hey, if you've enjoyed this video, hit that like button and subscribe for more content like this.